Hi, this is Shane with the Rational Trader. It's Wednesday. It was FOMC day, and I stopped trading at 10:30 to avoid that. We'll take a look at what the result was of that. Started trading at 6:45. The market fell early, and then got into this sideways mode here right when I started. So we stay out of trouble there. I don't catch this fall here. I do catch the turn here. But you can see I get nicked right here. So that's a function of the stop is too tight or just the entry is not that good. But you gotta like the signal. It's finding that bottom there. And then I actually get nicked again right there before actually finding it here for a nice run. The run goes all the way to up to there. The system doesn't add right there. It's on this little pullback. I want to take a look at that. In fact, let's do it right now. How far are we from that spot? That's 57 ticks. So the way the system is set up is you have to be at least 30 ticks away from the entry before you can do an add. But I don't have a maximum set that says if you get this far away, you don't do an add. Within 30 ticks seems okay. 30 ticks from the entry seems okay. And in fact, if you look at what happened, the market did continue going up here. I get nicked again, so there's a function of the stop is too tight. There's just a little too much volatility in the market. So I'm thinking about that. Should I put a max on there where there's a window of space or distance where you can do an add, and if you get outside that window, not do it. I hadn't put a max on before, just a minimum. So it's something to think about. What I've been noticing recently meaning in here, all this time here, where the range of the market is so high, the volatility is so high, is that the ads have not been doing that great because there's so many violent reversals, or the pullbacks are so deep that any add you do is not helping you. So I'm considering just turning them off for the moment. So for members to do that, it's pretty simple. You just go to add. There's 4 different kinds of add behaviors. Just set all these to 0, and then you won't do an add. Each one of these is a different behavior. One's a breakout. One's a pullback. I keep putting the same number in. One's a pullback. The other is a dramatic increase in speed of the market, and then another specialized kind of pullback that we see called a type 2 price reversal pattern. So that would turn them all off, so it won't do any ads now. That's something to think about until the market's kind of quiet down a bit. The intention of that system is to catch like this break right here. Get in, get 30 ticks, add on the break, and then off you go. It's really not, what we didn't really have in mind was, you're 60 ticks in and you're adding. Having said that, there are times when that's perfectly acceptable to do. Here we get nicked, we get a little bit more. Another long right there. Gets first target and then scratches for a couple ticks, and then a loss here on a long that's just a hint early again. That leaves me at scratch for the day. 11 o'clock, where the FOMC announcement comes out, is right here. And the thing to watch, just from understanding how the machine learning system would have done, is to look at these codes. The 1s and 2s mean no action, don't do anything. I don't see any pattern there that I can work with. 197 is a very aggressive long. Is that true? 197. I got to check that. 197 might be one of the new low volume node entries. In any case, we would not have gotten filled there. This is all in the first 10 minutes. No action. Up here, we're seeing that 197 again, and again there. So the 197. Okay, so actually what that is that's I'm expecting it's seeing this fast move down and saying that it's going to fail, get long. All right, so you can see it's wrong here. It's right here. Another 151, 128. Get long here. You'll scratch. No action, no action, no action, no action, no action. Lots of no action. So there's not a lot there to work with. There's a 127, which we wouldn't take because the market just falls away. And so the decision to stop at 10:30 looks like a sound one. There was really nothing there for the machine to work with. Actually, let's take a look at this. I didn't see this. This is getting close to the end though, 12:40. So I would have stopped right there under normal circumstances. There is a nice looking 298 right there. So you'd short on that bar and try to get in. There's a 128 there. You take a loss on. And that's it. So overall, I'm pleased that I just kind of stayed out of that mess. Let's take a quick look at what did that do to the structure of the market. Came down to 76 basically. So the market didn't like what the Fed did, which was what everyone was expecting. So you would sort of expect it to already be priced in. We're at 76 again. Key level in the market. We'll see what tomorrow brings. The market's got to make a decision here. Which way are we going to go? Back up to the highs or headed back down to, what's in play if you break through this level here at 75.80 is all the way down to 7,500. But basically back down to this level here. All right. So we'll see what tomorrow brings. And that's it for tonight. We'll see. I've turned off the ads. I think I'll leave them off, and then until we see this settle down a bit. The markets have been a little deceptive in that when you come in the morning, they don't look like they're crazy, but then as soon as the market opens up, they're like going berserk. So a normal method that I use is to look at the overnight action and see if there's a big range in the overnight action that I adjust my plans accordingly, expecting a volatile day. That hasn't worked that well these last few weeks, where every day you just have to expect it to be a volatile day. So I've been using volatile rules every day because of that. And that's it for today. We'll see what tomorrow brings.